Um, Hello. So today I'm going to be talking about how I use the object tree, specifically as an ICT trader, how I keep track of all the PD arrays provided to us, and how I, keep them organized. It's really important to keep it organized because, as you can see your chart, this is just a random image I pulled up from Google, but it's really no different too than how my chart was a year ago, even as an ICT trader, and more so 3 years ago, 4 years ago, when I was just drawing random lines on my chart. So it's really important to stay organized as a trader. This is another image that I have here. A little more cleaner. Obviously, you have indicators and whatnot, but to me, it's still pretty messy. I like to keep my charts not empty, not naked, but as minimalistic as possible. That's just the best thing that works out for me, and I'm going to show you how to do that, and while still having what's very important and what's needed on your chart, having all the PD arrays marked up on your chart. So this is kind of how most people's object trees will look. They'll have trend lines, rectangles, Fibonacci's, and they don't have them labeled. So this is kind of how it was before. I think the object tree is a really important tool because it's just another form of organization, and you're able to kind of understand, I guess, more so what you're focusing on. And I'll show you exactly how. So, this is how my current object tree looks. So, this is a screenshot that I grabbed from my chart right now, which I'm going to show you. And you can see that I have everything labeled. Then I have these little dividers here. I'll show you how to do that. It's really simple. But the main format that I have is new week opening gap is up here. Then these PD arrays are the 4 PD arrays that I marked today, and they're all from the PM session mostly, or used for the PM session because that was the session I traded today. And then I have the weekly first presented fair value gap, which I'm not really going to explain, not so much technicals. I'm just going to kind of give you the organization manner that I'm using. But now, because it's on my mind, what is a weekly first presented fair value gap? It's the first presented fair value gap of the week on Sunday. So when the market opens at 6 p.m., the first 1 minute candle that creates a gap in price, you mark that out, and it comes very handy. So then I keep the new day opening gap, and keep in mind that all of this is intentional as how I have these layered. So usually it goes weekly first presented fair value gap, new day opening gap, true day open, midnight SMC. I'm still you can name these whatever you want, whatever works best for you. Then have the opening range gap, first presented fair value gap for the New York Open. If you want to add, for example, the New York PM session. So like this is for the New York AM session, but right here you can see I have this first presented fair value gap for the PM session. So you can have a separate folder for that and put it above or below, whatever you want to do. And then I have my sessions, which I'll show you what that is. So I hand draw those out basically with a rectangle, but it's much easier to keep it in a folder. So first things first, just a suggestion to TradingView. It would be very helpful if we can have folders within folders. It's pretty self-explanatory. I don't think I have to make a presentation or anything extra about that, but if you agree, let me know. It's just pretty handy to have a folder within a folder, And then these are my PD arrays that I used from yesterday. So you can see this one is from Sunday. That was the first PD array that I kind of, or order block that I picked up on for the week. That was, right there. And I'm able to disable and enable that. I have it marked right here. And kind of what I do is I move these, if I'm able to highlight this, I move these down here as I go. And then towards the end of the week, I'll organize them. So you can see that I only have 7 PD arrays right now marked on my chart, excluding these, which are constants. These will always reoccur in price, basically. So these are time-based delivery, meaning that the weekly fair value gap, it's usually within the first hour of the open. New day opening gap, we know from 5 to 6 p.m. that occurs. And then true day open every midnight, this within the first 30 minutes of the midnight, candle. The 12 a.m. true day open. Opening range gap occurs at 4:14 p.m. close to 9:30 a.m. open. And then first presented fair value gap from 9:30 to 10. So these are kind of the constants. If you're going to have it, if you're going to constantly be drawing these out on your chart, it's just nice to keep them organized, right? Right here, you can see I have the Asian standard deviation labeled as ASTD. I have the older Asian standard deviations saved in here in this folder. And the newer ones are, like, the current week is always just going to be a little bit above that. I'll show you more. This is just one screenshot, but I'm going to show you how I store my old PD arrays. And also, I totally forgot, what is the week, the W14? That is week 14. So currently we're on the 14th week of the year, and so you'll see that I have these logged as for every week. So it's just helps me keep or it helps me get an idea of where we are. So yeah, I like it like that. That's how I organize it. Next, you see that everything is labeled with the all these PD arrays. They have the time first, so, or like the time frame that I derived the PD array from. So 1 minute, 5 minute, 15 minute, whatever. It can be the 1 hour too. It can be a daily, monthly, weekly. I just do DWM, whatever it is. And I'll show you that too. Then I have kind of what it is. So you can see, and they're all annotated. It's very simple. It's clean. I can key up on it instantly. And I'll show you exactly, in a second. In like 2 minutes, okay? So sell side liquidity as SSL, REL as relative equal lows. Then I have the time, because I need to know what exact time marker was that PD array or old high or low referenced on, and then the date. And you can do that however you want. You can do it in if you want to write April 1st 2025, you can do that. If you want to do it in this format, go ahead. So yeah. So moving to the chart, this is the old version. So this is from 2023. I just pulled up a quick chart, and I have a lot of annotations here. This I've never gotten to, and I haven't organized. I have really spent my time with live testing and forward testing, but eventually I'll come back to this and I'll use the exact same format, even a better format, as time progresses, to organize this. But you can see I don't know what anything is, and a lot of these are the same things. So for example, every day I have these markers when I'm going back in my back testing and seeing what price does, why it does it. I have these little daily markers. So it's as simple as this. I can go right here and I can group all of these together, Monday to Friday close. Grab that, and I can see, okay, which ones are those? Those will be towards the front of the object tree, right here. And I can group these, create group, and I can just do whatever week this is, week XX. We'll just do week X and daily divider. And then to that folder, I can add, either if I want to do all the daily dividers and have it all these weeks in one, or if I want to do week by week. So it's very customizable, however you want to do it. There's many different formats, but the idea is, I haven't really seen anyone use the object tree like this. I'll show you exactly why I like it so much, and that's because I use it mostly for ES and NQ, and yes, the dollar index too. But it comes really handy. So you can see, I'm just gonna actually full screen this, make this as big as possible. Here, I'll do side by side. Actually, that's unnecessary space. There. Alright, so that's good. So, first things first, if you full screen, if you like full screen this chart, I click Shift F for that, and then you click object tree. You can pull it up right here. I personally prefer it like this, not that right here. So that's much better for me. But sometimes I do full screen my chart and use that object tree right here. So, okay, so what is the point of it? How do I use it? So obviously, let's say I didn't have this new day opening gap for going into Wednesday's trading. So I would simply go here, zoom in, find the close, and then the open. So I would go here, label this, and I think this is also important on like how you write this. This is a very like basic, but you might learn like a shortcut or two. I seriously think this has saved me a lot of time overall, and I'll show you. So you click this, and all my labels are the same. The only thing that really changes is the date. So I'll always have a new day opening gap, high or low. So in this case, this is going to be a high, okay? And so then I'll do April 2nd, 25. Now if you want to do that, or you can do April 2nd, 25. Whatever you want to do. I prefer for new day opening gap like this, but I can change it whenever I want. Then as I'm typing this, rather than highlighting and clicking, putting my hand on my mouse and going back and highlighting all of this while my cursor is here, I just click Control A, Control C, move it up here, boom, done. So now that gets changed. All right, now I want to label this one. Okay, if you want to do this, you can. Boom, copy that, paste it here, and then just edit the L. It really honestly just depends on what works for you. So now I have that labeling. I always like the low over on the low and then the high on the high. So change that, and then boom, drag it to new day opening gap. Now, if I open this folder up, you can see I have the new day opening gap from before. And sorry, this is actually the wrong color, but that's another thing actually. So I'll just show you that too real quick. So, I have all my things color schemed. So Monday is blue, Tuesday is red, Wednesday is orange, Thursday is purple, and Friday is green. So you can see that no matter what the PD array or whatever, what the setting is, if Wednesday is Wednesday, then it's orange. Okay, if Thursday is Thursday, it's purple. So then I'd go here to Wednesday, new day opening gap, and do the same exact thing. And one more time for reference, this is exactly how the process would go. And this is about the speed that it gets. If you're faster, you're faster. If you're not, then you'll probably improve. But I do think that this saves time, and more importantly than that, it helps you stay organized. So you see I have the new day opening gap here for Wednesday's trading. Will be used on Wednesday's trading. Alright, so say I want to go to the Tuesday new day opening gap. That would be Monday 1800 candle. I can just go over here, go to horizontal ray, boom, 6 p.m., see whatever I need to do. So I have this for everything. Opening range gap on. I have that labeled like that. This is something I just started kind of, is labeling how many points it moved. So the opening range gap, you can see that I have minus, negative sign, opening range gap, 6 points, and then the date. So this is for Tuesday's opening range gap. So that's today, basically. It's currently Tuesday. And so I can just look at this and see that, like, okay, we gap down 6 points. So I know that instantly 56.45 50 was the 4:14 p.m. close, and then the 9:30 a.m. opening for Tuesday was 5638.75. And then you'd see I just go here, Monday, Tuesday, 9:30. You can see that matches, and then go all the way back to 4:14 p.m. right here. You can see, boom, right there matches. So it's just quick referencing. I also write a lot of these levels down on the notepad that I have beside me, so that helps. Now let's say I want everything off and I want a fully clean chart. All I gotta do is click here, hold my shift button down. You can see when I click shift, this kind of grays out, and then boom, go here and show, okay, hide, boom. So now I have a blank chart, basically just my new week opening gap and some key levels. So on a daily chart, this is how it would look. So this is really all I need to see until I'm like, kind of like focusing more on PD arrays and a lower time frame chart. Another thing is that all my levels, if I click Monday MSMC, that level will disappear because the preset I have it on right here, when I click this, the visibility is automatically defaulted to the minutes chart because that's all I need. I don't need it on an hourly chart. I only need it on a 30-minute and below. And if you need it on an hour chart, click this, boom, save as, Monday, MSMC, done. It's that simple. So it's really all just personal preference. But another thing, so now, okay, I have the new week opening gap here for this current week. If I want to turn on the other new week opening gaps, let's just say I want to go 3 weeks back. It should be here. So looking at 3-week look back. So I have this current week, then I have this week, and then I have this week, and then this week. So actually, I just noticed this right here, is that this is wrong. So it should be like this. So I also keep it in order. So beginning of time to current date, basically. So yeah, so live learning, so that would be that, and then that would be here, so that would be off. So this is a proper 3-week look back. You can see that we're trading currently at the March 16th new week opening gap. So I'm not going to do a live analysis right now, but you can kind of see like how these levels are easily pulled up and how they can easily be hidden. Boom, like that. So we took sell side down here. So this weekly level, I have all the way at the bottom of the chart because weekly, daily, and monthly levels I don't really touch too often. It's just something that like I look at every Sunday. Sometimes I'll add something intra-week, but they mostly just stick down here. So you can see I have a couple of daily PD arrays. Let's say I wanted to turn on all the daily PD arrays. Right here, you can see it's still like a little bit clustered. It's not that bad, but we have like a layering of these daily PD arrays. But now if I wanted to pull up this SIBI right here, rather than redrawing it, I can just go here and boom, like that. So simple. Daily sell side, we traded here, so I could have pulled that up whenever. And you can also add alerts on these levels and still have them hidden. So you would click add alert. I don't know why it's not working right now. Strange. Yeah, that's weird. It's not working right now, but if you want to, try it for yourself. So I'm going to turn that off. Monthly, you can see I have this monthly fair value gap. I can turn that on whenever I want, and you'll see that we're trading inside of it right now, right? And you can see that kind of provides the framework for why we traded down here into the sell side and why we're rallying back up. So the next draw, reasonably, rather than using this imbalance, which you can use this imbalance, which is an older imbalance. And let's say sometimes something that bothers me is how like this line is behind the monthly blue shaded area. It's very simple. Just change the ordering of these. So the object tree, it works in a manner that if something is above another PD array or drawing, then it'll just layer it basically. So it's very simple. Okay, so let's dig a little deeper on the intraday PD arrays. But before I do so, something that I've been backtesting, two things. I'm going to kill two birds, one stone here. I'm going to go on a 5-minute chart and look back to the beginning of the week. So that would be from Sunday. And Sunday would be here, okay? And so you can see we have a little bit of Friday. I'm actually going to do a 15-minute chart. That works better. Sorry. Right here. Perfect. All right. So 15-minute chart, and I want to see sessions, okay? Let's say I want to see when this high, just visually, I can obviously go and hover my cursor over here, over here, over here. These are three pretty major swing highs and lows. And I want to see when they're priced in, when I'm back testing, or if I'm, studying during the week and I just want to see something, all right? Session. Week 14 session. So this turns on all the sessions for the week of the 14th week of 2025, basically. And you can see that they're all pretty clean. I can turn it on and off however I want. I can go in, and if you want to label these, go ahead. I don't really find any need for it, and it's just like sort of like a tedious task to do, which I guess you could say that for everything on this, like labeling all of these, but these are more important, and I'll show you why. So yeah, so I can see, okay, New York AM session, opening range gap, priced in the low of the week. Then that same day we priced in a high of day over here, and then we sort of consolidated, didn't take out this low, used this fair value gap here, attacked this high, and that's why next I believe is that low right there. And that would be, rather than having to go back to a daily chart and seeing everything, I can just tell you right here, it's a daily fair value gap SIBI low derived from the March 10th 2025 candle. So super simple. We also have relative equal highs here, which have been swept, but I still think that these highs can be attacked, and then after that is that. So this is obviously not an analysis, but it shows you that yes, we're trading inside a monthly fair value gap where it would be expected that we would trade a little bit higher, and then if I wanted to, I can come here, hide, and that level is still there, so I can refer back to it whenever. So these next topic is going to be, before I forget actually, then I have the Asian standard deviations backlogged here. So this is a Sunday, this is a Sunday, this is a Sunday, and this is the current week Sunday. I like to draw the standard deviations from the Asian range of the Sunday that starts the week, and it gives you just a good reference on price. And you can see that these levels are pretty well respected. Let's say I turn this off now. If you want it on, you can keep it on here for your reference, just what I'm talking about. You can see that we came down, touched the -2 standard deviation, which is, I'm not really going to explain too much, but copy paste the Asian range from Sunday 1 times, which would meet here, and then 2 times lower, which would meet here. So from there we rallied, and look at the respect to that. So these levels are pretty sensitive. It's pretty incredible. So yeah, we came up, rallied, 5 standard deviation here, so that's to the upside. So the downside will be -1, or the downside will have negatives, and then the upside will not have negatives. And so the only thing I don't like here is that the labeling is a little incorrect, because if you take this Asian range here and then copy paste it one time up, it should be 1. So this should be 1, this should be 1.5, this should be 3, this should be 4, this should be 5, and on. So whatever, it's fine. It doesn't really matter. It gives you a pretty good sense on price still. It's the same thing. So yeah, you can see that like we failed to touch the Asian range down here. That's why I have this blue. You can see. Yeah, so that's the Asian range. Now let's say I just want to quickly measure out this. So I have my frame of reference from this low to this, this low of the fair value gap to this low of the week. I can quickly turn on all my new day opening gaps from the previous week. Let me turn this off and see where do they line up. And if it doesn't come up in the frame, then it's really not super important. This is just for low-hanging fruit. Let's say you want to target a little higher. Then I can start to scroll. All right, first one that comes up, new day opening gap low, March 27th, 2025. So if we do go above that SIBI, we can trade up into that, right? I like the new day opening gaps. Same thing. Let's say we do the same thing for the opening range gap. Nothing, right? So there's nothing from the previous week that is being referenced to until we get above that SIBI, basically, right? Same thing, previous fair value gaps, nothing until we get above that SIBI or inside of it. So above the consequent encroachment would be crucial. And now let's focus on, what framework I used for the trade today that I took. So I'm just going to turn on the sessions here. And you can use an indicator for this, of course. I prefer to draw it. I just think it has more benefit to it. So without getting really too deep into the analysis, that's not the point of this video. I had 4 PD arrays that I keyed up on today. All right. The first one was this one. All right. This is from yesterday's PM session. Okay. You can see right here. That was the first presented fair value gap after the first 30 minutes of the 3:30 time mark, right? We traded. It's been traversed through good amount of times here, right? And then we came up and swept that buy side. And so the New York lunch hour forms a high of day right about there. And right then I start drawing out my PD arrays, which is 1, 2, 3. Okay, so you can turn it on like this, and you can see that we had this 1 minute fair value gap SIBI 1:05 p.m. on April 1st, 2025, and that was the first fair value gap that was presented after 1 p.m. right there. Nothing here, nothing here. We have a volume imbalance, right? But this is the first gap. And then we trade up into it and then reject heavily, okay? Next, this one. So this is actually a mistake on my end. I drew out the 130 candle, and while it still provided the same range, in my current understanding, it should not be the exact candle that begins that session. For example, 9:30, you can't use 9:30. You can only use 9:31. So I would expect the same to be for 1:30, but this is where I go back into Obsidian, study my notes, and see what's right and what's wrong. But it still provided the same framework although this is the correct candle, but this is the framework that I used for my trade. Okay, we came up, created that. So I wanted to see this act as inversion, and the way I have that labeled is 1 minute negative sign, right? Because it's bearish inversion fair value gap, but it's still a BISI. So just mention that it's a BISI, and it was formed at 1:30 p.m. for 1:25, right? Easy. Come up, come back down, trade higher, buy stops attacked here, come back down, failure to create a higher high, and then come back down. So that would essentially make this a breaker right here, this candle right here. And so I went short somewhere over here. I can't remember the exact price level, but I will pull up a screenshot. The problem is that after 5 p.m., after 6 p.m., the executions don't show on Apex, using Apex. So I'm going to show you exactly what levels I executed on. But it was around, I think it was this candle. So we'll find out whether I was right or wrong. It's a nice little quiz for me. But yeah, you can see what if I had used this range right here, using this, it would have essentially provided the same framework, but it would have really, really been nice to see this in the live moment, that the consequent encroachment was very much respected. Traded lower. I used this bearish breaker to execute, and then wrote it down to just 5 handles actually, but it did trade down to the 1 minute first presented fair value gap, which was formed as a buy side imbalance, sell side inefficiency at 3:32 p.m. and it was on March 31st, 2025. So that's how I use the object tree to just organize my drawings and PD arrays in a very clean manner. I have lots of shortcuts and tips and tricks on the object tree. It's just that I'm having a hard time putting it all in one video. So, as you watch the videos, I think you'll pick up on them. Or maybe not videos, but live streams. So I do plan to live stream this quarter. Yeah, this is something I drew, after seeing it trade down so much, equal lows. I didn't see this live real time, but right about when we were trading back above this presented fair value gap, I just wanted to label this. And now what I can do is when I go take my screenshots, like this, for example, it's very nice and clean. There's not too much going on. I know that we rejected this fair value gap. We came down, we traversed through here, right? We traded lower, came up, bumped it, inversion fair value gap, breaker here, right? So I'm talking about it in my review. I don't need it drawn because additional to my screenshots, I also have recordings. So I don't necessarily need it drawn, but that is a nice thing. If you do want to draw that, it's just, for me, it's just a little too busy. But if I did want to, the day I want to annotate that, I would just take that candle and bearish breaker, boom, annotate it as such, and you can see that there was very nice reaction based off of that. Came trading lower down into here. It was probably this candle that I, within like a minute or two, the position was opened and closed. So I'll show the screenshots for that right now. And so here it is. You can see 1358, very close to, I'm sorry, I didn't have it up. Here it is now, 1358.56. Average fill price 56.56. Market order to sell short. Then I placed a buy stop. Almost 20 seconds later, 30 seconds later, at 56.61. That's 5 handles above the market. Keep in mind we're going short. So that's a stop order. And then almost 60 seconds later, 70 seconds later, the order is filled at 56.50 and plus some 2 ticks as a limit order. So I'm going to translate that back to the chart right here. And you can see 158 was the entry. So right around this candle. And I specifically utilized a 15-second chart. So yeah, very nice. 56.56 inside that breaker. Bada bing, bada boom. There it is. How I use the object tree. It's very handy, very, very handy, especially if you're even on mobile. It helps, even though I don't go live into these and add these annotations like mid-trade unless I have time. You can see that in this trade, for example, I just drew out this knowing what it is in my mind. And then I came back and annotated it after the close. And so that just helps me. It's a very nice logging, but I still knew that this was, even though I wasn't correct 100%, it's the same reference, you can see, because the range is essentially the same. I was still looking for the first presented fair value gap at 130, and I was on my phone, so, you know, I got it incorrect, but it still worked out. So the breaker I used, I didn't even annotate it. I just knew that once I saw this, right, I felt confident in going short, and so I utilized a 15-second chart inside the breaker, went short, caught it at, what was it, 2 p.m.? I don't know. Yeah, so very nice. I have a lot more for the object tree. I just really can't get it off the top of my mind. There's no script to this video. If you have any questions, let me know. I'll answer all the comments down below, and make sure to like. It really helps out. And yeah, subscribe if you feel this was helpful. Thank you.